Howdy. Welcome back to Dion Talk. In today's video, I'm with my friend Matt from Lumberjack Landlord. The other day, we did a video on Michael Zuber's channel, One Rental at a Time, and after the video, we were talking, and Matt asked about how I do my turnkey investing versus how he does his rehab investing. He's been doing the BRRRR method since before it actually had an acronym to go with it. And so we're going to have that conversation today. Before we do that, though, I want to clarify that I don't actually do turnkey. To me, turnkey sounds like a company that does turnkey rentals, found a property, rehabbed it. They want to be the property manager, which is part of their model for making money. And then they want to sell you the property, so you buy it at a higher fee, but it's really kind of hands off. You don't have to do anything. And then they manage it.
Sure.
I buy rent ready or already occupied properties that need very little work right off the MLS with traditional lending. So no turnkey company. If that fits a person's description of turnkey that's watching, I do turnkey, but I don't use a turnkey company. So Matt, if you could take just a few minutes, tell us a little bit about the size of your portfolio and how BRRRR has helped you get to where you are. And then we'll talk about the differences.
Yeah, happy to. So Dion, super thrilled to be with you today. We had a lot of fun last week. I mean, almost too much fun, but it was super exciting to have that call with you and with Mike. It was a lot of fun. Look forward to doing more of those in the future. But yeah, like you talked about, super excited to be able to help people. My portfolio were 70-ish units. I still haven't counted since we talked. So, and I actually just closed on a duplex this morning. So we're still 70-ish units. We're in primarily 3 towns. And really, we kind of do, hence the name Lumberjack Landlord. We kind of do as bad as it gets, things falling in, caving in, missing walls. That stuff is all stuff that we kind of embrace, all the way up to kind of what you talk about, which is kind of rent ready. Tenants already in place, but just needing to fine tune a little stuff. I would say we stay away, largely speaking, from A class, and we like to add value and bring C and B stuff into A class, because we believe that that's really our spot in the market, is to take those old, dilapidated and dated properties and try and, refinish them, redo them, and give them new life to somebody that really just wants a real nice place to live. So that's what we do.
And you've been able to do this while working full time.
Yeah. So I work full-time plus is what I like to call it, because I work in a business where my cell phone is my best friend, aside from my wife. So I work full-time plus, and I do all of this, and I self-manage like you do.
And you do this at the same time that you have an 8-year-old,
3-year-old, 2-year-old, and 8-week-old. Yeah. My wife is awesome.
Okay. Well, that's the thing I didn't have. I was, I might take this out. I've always been able to keep custody of my kids. I've never been able to keep their mother around. So didn't have that benefit to help. Yeah, I'm probably going to take that
out. That's still good. Yeah.
So that's impressive, because
thanks.
I really look at this as my system works for me because of how lazy I am.
Yeah.
I couldn't.
I get that.
I work full time, single parent, but the rehab, managing a rehab, contacting contractors, even for me, finding the deal is something that I've had to make a system that's very simple.
Sure.
How are you finding your deals? All of mine are from the MLS, found through auto searches with multiple agents.
That's probably right now, I'd say that's probably about half of the deals that I find are MLS. We went under contract on a deal literally 2 weeks ago where it had been live for 3 minutes, or I got the listing. I called him back and I said, let's just do a full price offer, and then we'll walk it within 24 hours. And we did that deal in 3 minutes later, or 3 minutes after it was live. We did that, and 7 hours later, we were under contract with them.
That's what a lot of new investors struggle with, is a home buyer goes and looks at 20 houses, thinks about it for a few days, makes offers. And we're in a seller's market now too, so that's not even a good option for home buyers. But an investor, the key components are knowing your area, knowing what your area average market rents are going to be, because that's going to help you determine what your cash on cash return will be.
Absolutely.
And making the offer fast, because as investors, we get stuck in our own head and we think, if I was going to sell a property, I would list the property, I'd give several days to get the best offers in. I would compare offers. I would send back emails with, give me your best and final, because I've got 5 other offers. And I would escalate that up to as high a price as I could possibly get. But home sellers, even small multifamily sellers, aren't always investors. They could just be done. They tried it. It didn't work. They could have inherited it. There could be a divorce going on, a change in the family size, all these reasons that we'll never know why somebody's selling.
That's right.
Speed is our friend when you're making an offer. I think at least in Washington State right now, so your market's probably similar, you have about 4 hours from a deal hitting the market to having offers in that get accepted. But my last 2 offers, I had one accepted in November and one accepted in a month ago now, were asking price offers.
Yeah.
Just because they were in fast before anybody else came in with their over asking prices. And the new investor thinks, well, how can you make an offer in minutes of the MLS listing coming out? Because you know the area and you have an inspection clause, and that inspection clause is when you decide if you want the property or not.
That's right. That I can get the advantage there because I know my market inside and out. I know what market rents are. I know what the value of the property is, even though they put a different value on it for selling. And so I just have to be first. I have to be first. I have to be first. I have to be strongest, and I have to be cleanest. So I'm the first deal. I'm the first offer. I'm the best offer. And I'm the cleanest offer. All of those things go away and start to get eaten away with any other offer additionally that comes in. So that's why we're trying to be first. That's why we're trying to be, usually at list price. If it's significantly undervalued, like they were doing that on purpose because they wanted to stimulate and get a bunch of people walking in that have no prayer of getting that house because it's going to go for 100,000 over. Yeah, I can tell that too. And so I'll even offer over because it's based on the value of a property is what somebody's willing to pay for it. What I'm willing to pay for it is based on what I can get out of it for a return.
Right. The list price is a number that mattered to the seller.
That's right.
It has nothing to do with what I'm going to offer. A home buyer buys on payment. They don't buy on cost. They think, how much is my monthly payment going to be? I can buy that much. An investor buys on cash return.
Sure.
The more I listen to you talk, so you're working, you still have young kids.
I do.
You do your own inspections.
I do.
You're doing rehabs. You're doing.
Yes. I don't
make me really feel lazy. And someday I'm probably going to do more of the work like you do. But not today.
Not today. It's so I used to do all of the rehab in my rehabs. I would actually do the work. And that lasted for the first maybe 5 or 6 properties. And I just started picking my spots. Yeah, I want to do this project. Yeah, I want to do that project. What you do is over that time, like Mike talks about in One Rental at a Time, Mike Zuber in his course, what he talks about over time, and certainly I believe you talk about it as well, is building a team. And so I have the team that can do a lot of those things. And the nice thing now is after I've closed or a week before I've closed, I do an on-site at the property and I bring my plumber, bring my electrician, bring my carpenter, bring my flooring guys. I bring the kitchen guy. I bring everybody together in one time. Everybody knows each other. Everybody respects each other. And everyone knows that the sheetrock guy is going to be a pain in the
it's all about the order that things are done in too. Yeah,
exactly. So, and that's the thing is, Dion made a great point there. And for those of you who are new to investing, this is absolutely critical. The order in which things go is critical.
The BRRRR method gets a lot of attention because the acronym sounds cool. BiggerPockets talks about it all the time. They have a book. One of my favorite videos is this one right here on how to BRRRR and why I don't.
Yeah.
I was actually really basic and I said, you can miscalculate your after repair value. You can miscalculate the time it's going to take to do the rehab. You can miscalculate the cost of the rehab, and your hard money has a strict timeline sometimes. And so there's these risks that you're taking.
Yes.
You really just broke it down in a better amount of detail. Each stage of a rehab has to be timed. There's this chronology to it where your contractors have to know each other and work together, which and I'll be the first to admit, you are more successful than I am. You have 70-ish units. I have so few units. I just
started sooner.
Ish to it, right?
Yeah, I just started.
started Saturday. There are different levels of financial freedom. For me, basic financial freedom happened at 8 years, and 3 times my financial freedom number happened at 10 years. So that income
Wow.
snowball started to kick in and things really
Yeah.
changed in the last couple of years.
That's awesome.
But I did it working full time,
Yeah.
buying rent ready or already occupied properties. I have never done a rehab.
Yep.
I've never done a BRRRR. I've never used hard money. I'm still using traditional lending.
Mhm.
That you go and do your inspections, that you did the rehabs yourself in the beginning is something that people to get to 70 units are probably going to need to do. There needs to be
Yeah.
some creativity to it. I'm only at 16. I was only able to get to 16 units, but one of the big differences with the way that I do it is I'm saving up the down payments, which sounds like a challenge. If you're saving it from your W-2, that is a challenge. But
Yes.
as I added cash flowing assets, the income snowball grew to where saving up the down payment didn't require me actually saving any more money. It just required me not spending any more money.
That's right. That's right.
So a lot of times with the BRRRR method, people talk about reusing your capital over and over and over.
Recycle. Yep. Sure.
Recycling your capital.
Mhm.
But that's narrowing down the profit margin on that first property,
Yep.
which is something I haven't done. And when we're first starting, when we have those, first 4 units that can usually get us to first 4 properties that can usually get us to financial freedom, your equity position is much more important than it is when you have 70-ish units.
What I'm most proud about is our equity ratio, I guess, if you call it, is we have about half. We only owe about half what our portfolio is worth. Now, that's been a lot of great growth, but if the economy flips on its head and it goes minus 25% in the next 2 years, guess what? I still own a third. I still have a third equity in my portfolio. So I agree with you, Dion. Slow and steady wins the race. I'm not about leveraging and squeezing the dime out of every last bit. I think it really has to, you really want to make sure that you have healthy margins. That's what I'm looking for, is that healthy margin. I just bought a building that the same owner had owned since 1982. What is a typical landlord from 1982 think? He thinks, holy cow, I bought this building for $65,000. It's a 5 unit. And he bought it for $65,000. Now I paid him $350. He's elated. The funny thing is, so am I. That should have cost me 500 grand, but he was elated. He was like, nope, 350 is good. I know it needs a bunch of work. It's fine. So he quadrupled his money, or 5x'd his money over that 5 plus X, his money over that 40-year period. Plus he was getting all the rents. And wouldn't you know it, Dion, his rents were about 60% of market.
It would be great if you had a method where you could get the tenants to ask you to raise the rent, right?
I've heard of a method like that, and quite frankly, love it because it's way better than my paper method. Your binder method is absolutely awesome. If you guys are trying to be landlords, that binder method is the coolest, and quite frankly, something that we're actually going to adopt, because this building in particular, we just closed on 60 days ago. We don't like to go in and just raise everybody's rents arbitrarily, but we do share with them, hey guys, here's what the taxes are now. You probably didn't know that. And taxes in New Hampshire are extremely high because we don't have a sales tax and we don't have an income tax. So we pay for everything with property taxes. So property taxes on this building are about $9,000 a year.
I've had several times in the Facebook groups, like, BiggerPockets official group, Real Estate Rookie, or the Millionaire Real Estate group that Stephan put together.
Yeah.
Where people say something, and I can usually tell this is a person who's not purchased a property yet. The
Sure.
investor chimes in and says, well, it's your property, you set the rents.
Yeah.
Not thinking that a turnover is going to cost you somewhere between $3,000 to $8,000 on an average one. For you to raise the rent maybe $200, how long would it take that $100 or $200 to make up $8,000 in a tenant
Exactly.
flip?
Yep. Exactly.
Whereas if you do use your method, like you have the paper method where you present, here's the costs and why it's gone up. And I have the binder method where you present, here's the rentals in the area, what they're going for, what I paid for the property, and asking the tenant, what do you think would be fair? Getting them to have a voice in the conversation, which many tenants have just never had. So what's really great about this is your method works, especially for somebody who wants to put in the time and effort and learn all of those skills. Yes. My method works for somebody who, I call it the lazy way, but it's really the systematized way, where, you said, you like to do the inspections because you can find things that an inspector might miss because you have those skills. I haven't developed those skills, and I definitely didn't have them when I started, but that home inspection is a negotiating tool
It is.
towards the end of a sale to get the price down, because it's professionally written. There's pictures that go along with it, and it's worded in such a way that sounds like the whole place is falling down because the inspector's trying to protect themselves.
Sure.
And then it gives me a written, photographed to-do list to share with my handyman after closing.
Yes.
So both methods work. It just depends on which route the investor wants to take. I think that you give out some really good information, and you've got a really good way of putting the information together. And I'm just going to say it for you. People should go check out your YouTube channel, Lumberjack Landlord, and
Yep.
you also have lumberjacklandlord.com. I know that you're like me. You've answered questions, you've taken phone calls.
We do.
Just kind of the whole point of this is to share this information with as many people, even
Yes.
though we only have so much time to go around.
Exactly. If there was only that way to duplicate ourselves, which we found a way to do with the amazingness of YouTube.
Thanks a lot for taking the time today to share, and I look forward to more videos with you in the future.
Happy to do it, Dion. Thanks so much. Take care.
Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.
Happy to do it, Dion. Thanks so much. Take care.
Until my next video, thanks for coming to my Dion Talk. I have to say that again because I laughed. Like, because it probably sounds weird when it's just you and me sitting here because I'm used to be by myself.
Yeah, I get it. It's fine.
My face will be all red. It's great.